Welcome back to another episode of Momentum Monday. This week, we'll be covering the seeming rotation into Apple, what's going on with Tesla stock, Nvidia's vicious pullback on Friday, the parabolic crypto play in equity markets, and the hottest trends in biotech. Then we'll jump into a big picture look at markets, answer some of the community's best questions, and then wrap up as always with our favorite stock picks for next week. My name is Tommy Trampo, and I'm joined with our charting captain, Ivan Hoff, and our fearless admiral of the streams, Howard Lindsay. Before we jump into the topics of this week, both of you guys had amazing stock picks in the previous show. Ivan Hoff, you were all over the GLD breakout, and Howard, your render play exploded off the charts. So before we get into the topics of this week, can you guys just give a quick summary of where those plays are right now and how you guys entered these things in the first place? What put these on your radar to begin with, and how can people learn from these explosive plays that you guys nailed?
I mean, everyone saw really that huge base in gold. People have been talking about it for months and months, but it never really took off. And then what really brought my attention to it was that jump last Friday, the Friday before, on high volume. And that's what really made me think that, gold can follow through. Obviously, also the huge move in Bitcoin, which, both of them might be rising for similar reasons right now with the falling dollar and falling interest rates. So it was just a trade. I didn't know it's going to work out. It just was one of those that worked out.
Are you still in the trade, Ivan?
Yeah, I still own gold calls, and I still own some GDXU, which is the gold miners 3x leverage ETF. I own a little bit of that too.
Yeah.
And then you wanted to talk about Howard.
Yeah, Howard. Explain to people what the fuck's going on with render and how much that's just.
Let's first go back to.
I want to go back to gold, okay?
Okay, because Ivan and I were both on this. It's been like the eighth most gets achieved. This was so many false breakouts for years and years. You had Bitcoin working. You had, government stocks printing money. Nothing, right? Gold just kind of based, and then boom, quietly, it's as if it followed Bitcoin, right? Like, it seems so obvious that for thousands of years, gold kind of predicted where the economy, or where how bad trust was. And this time Bitcoin led gold, and now gold's confirming Bitcoin. So it's just interesting. I'm talking to a lot of my crypto buddies where I get my ideas from. I have to sift through this because I don't directly too much invest in crypto. I generally let them pay the 2 and 20, so I don't have to deal with all the stress of storing it and in passwords, etc. So full disclosure there, I pay for that alpha. I pay mostly, but gold. I mean, this is a perfect. If this was any other stock, if this was Tesla, this would just be 24/7, 365. That breakout. Look how much people talk about Tesla. It's in a downtrend, right? And look how little people care about gold, and it's breaking out of what, a 10-year base in a perfect economic kind of environment where rates potentially being cut next year. I mean, maybe they don't, and we get a pullback, but they're going to get cut at some point. So you have this perfect storm around commodities, stuff like gold, oil's perking. And then with render, if we're going to pull up a chart of render, I don't know if you can with MarketSmith, but maybe Ivan, you can on another platform. Just pull it up on StockTwitch. You can see the open sky.
Yeah, I'm just using.
My thesis here was I'm long through some funds, been long for a few years through the ups and downs, and you can just see when Bitcoin has a run like this, and there's just so much inflow into Bitcoin and stable coins. Eventually that money just feeds out into more. People triple their money in Bitcoin, and of course they feel more confident. and they start taking more risk in the digital world, rather CryptoPunks, NFTs, shitcoins, and Render's not a shitcoin. It's definitely not proven itself the tokenomics, but it's GPU sharing, right, which is probably the ultimate AI play. So I don't have like a true fundamental reason. It was more technical, and I'm seeing a lot of VCs that I'm an investor in start investing in this category of building on top of render and GPU sharing. So I don't know if you can pull up so this is complete all-time highs. Obviously, I was talking about this in the fours and fives over the last month or two on Trends with Friends in here. Not buying more here. Personally, I can't sell I'm sure most of my tokens are locked up inside these funds. So I sold a little of my personal stuff that I own. Just it's not really a hedge. It's just I can't sell probably most of what is owned. But again, AI meets GPU sharing meets a bull market in crypto. Who knows? If we were to pull up a Solana chart, Solana went from pennies to $200, right? So with crypto, I don't like to comment on where these things can go, but I liked it a lot more at 5 than I do at 12. And so you can see Solana way back in 2021 was pennies. It ran to $200, and now it's back to 100. I mean, technically these things are really hard to play. So be careful chasing, but at the same time, technical analysis only loosely applies to these things, it seems. Okay, next up. Sorry, everybody, for rambling.
Shout out you guys. I mean, you guys nailed the play. So for everyone that follows you into
right?
these picks from last week, they're feeling good. Yeah.
People, you only need a few of these.
All right, so let's get into the topics this week.
Sorry, I was going to say one more second. People need to be.
All right. Speaking.
Can you hear me, Tommy?
Yeah. Sorry, a little out of sync.
Can
you hear me?
People are looking at Tesla. They're asking about so many things, but really the business of that I try and focus on is try and find a couple great ideas a year. Really, like gold is one of them. Like we could quickly get off gold, but these altcoins for the last 6 months have just been the place to be, as have semiconductors and as has gold. And people still continue to try and talk about stuff that isn't working. And I think Momentum Monday is more about stuff that is working. And when you find something that's working, stick with it. Okay, sorry.
So speaking of things that aren't working, thank you for giving the segue over. Apple has seemingly been one of those stocks that just hasn't been working. But Friday, after having a historic 7-day in a row of being down, Friday, it seemed that there was a little bit of rotation going on while the rest of the tech stocks were in the gutter. Apple is up 2% on the day or something like that. So what do you see when you look at Apple? Is this still a dog as far as the rest of the tech sector is concerned?
Yeah, it's still in a downtrend. Obviously, on Friday, there was some risk of movement, and risk of, in this case, meant sell-off in semiconductors and Apple going up, as probably people were covering some shorts. And just in general, the stock is still a mess, still in a downtrend from a short-term and intermediate-term perspective. And it seems like, from what I hear, many people have tried their Apple Vision Pro and are saying that it's not ready yet. It's too heavy. It's not comfortable. So maybe version 2 and 3 are going to be much better. But as of right now, the market is not really fully convinced. Obviously, if you look at a really long-term chart of Apple, any 15-20% pullback has been a gift in hindsight. So people are probably going to step up at some point and support it. I don't know where, but maybe lower than right now.
Yeah, I mean it looks like dead money.
Howard?
Yeah, it looks like dead money. Obviously, I own it, but it's not. I'm not looking at it. It's not like it's going anywhere. I mean, the government's got it in its sight. The EU, average launches, cut the car. These are all things that it's the biggest company, one of the biggest companies in the world. It's like 9 countries. It's a continent. So these things can't just keep moving at the pace they were moving at. I think there's just a lot of money coming out of the Magnificent Seven, and looking just like the money's coming out of Bitcoin into altcoins, there's a lot of money coming out of the Magnificent Seven, and it's not leaving the market. So that's a good thing, right? Like, we're due for some kind of correction. Apple was leading this correction, but the money isn't leaving the market. So that's what's important.
Do you feel like, it was interesting that, Ivan, you brought up the Apple Vision Pro. Does Apple need another killer product in order to continue going higher?
Yeah, absolutely. I mean, if you study the history of all successful stocks, most of them really, the ones that continue for multiple years, they come up with new products every few years. And the ones that are one-trick ponies, they're just boom and bust stocks. They just go up 1,000, 2,000% in like 3 to 5 years. And after that, they just disappear. They have a significant correction. But the one that really keep going, they keep innovating, they keep coming up with new products.
Any thoughts, Howard?
Yeah.
It's like I said, it's not in a world where stuff is working and Apple's not working. I'm just not watching it. They have to not just launch new products, they have to launch whole new category. And they took a shot here with Apple Vision Pro. They were taking a shot, obviously, with the car, and we can see that they weren't working, and not yet. So fish where the fish are. If you want to index, you own Apple. In a market where you're not getting paid to index right now, you got to look elsewhere.
So you guys recently had a great conversation with Chris Camillo on Trends with Friends, and he was talking about robotics as a huge new category in markets. And Tesla stock is kind of one of the easiest things that come to mind when talking about, okay, if you want to play robotics, what stocks are you really looking at here? Is that the story that Tesla needs right now in order to recover from the seeming kind of brutal downtrend it's been over the last 6 months?
Look, this is a potential catalyst, but the market is forward-looking, but it's not that forward-looking. The market is looking 6 to 12 months ahead, and that humanoid robot story is probably 3-5 years into the future. So the market is not discounting that right now, and Tesla is in a downtrend. It's the weakest stock among the Magnificent Seven. It broke down last week, and I wouldn't be surprised if it continues lower and tests, even 150. Elon Musk seems, to be not focused on Tesla. He's not happy with his compensation package, and he's just spending his efforts elsewhere. And this is reflected in the stock as well. I mean, he's definitely the frontman of that company, and a large part of its valuation is related to his name and his actions. Howard?
Great summary. Nothing to add. It's like if this was, you wait till the chart looks like the gold chart, right? They have a lot of growing to do to catch up to that multiple. They have to deliver on, humanoids and AI. He's fighting OpenAI right now. He's sidetracked. Listen, he's amazing entrepreneur, but at some point the valuation catches up to the story, and it's hard to paint this. Toyota, like we talked about a few weeks ago, Toyota, like hybrids working. People are cost conscious. We're late, even though we could be early in a recovery, we're late in a spending boom, right? These are not cheap cars, the Tesla. They're coming down in price. They're not holding their value as well as they did way in the past. There's just all this, I would call it, weight on Tesla as everybody shoots for them. And he's got space. He's winning. He's spending all the money he made on Tesla in space. That's where his margins are. That's where his market cap is. That's where he can borrow money from. That's where he can pull shenanigans in the private market. So this is just a wait and see. What's wrong with paying $300 for Tesla once robots or his next great thing proves itself and catching it in an uptrend. In the meantime, I think people should be looking for stuff that's in uptrends.
So one of the founders and CEOs who's been making all the highlights is, Nvidia. Jensen is Jensen Huang is everywhere. Seems laser focused, on the future and providing, what matters to the AI industry. We saw a huge pullback on Friday. Is this anything to take note of, or is this a gift for bulls to enter at lower prices?
I mean, look, Nvidia was going vertical, and nothing can go vertical without breaking stuff eventually. And at some point on Friday, when Nvidia was near its highs, it was only 10% away from replacing Apple as the second most valuable company in the world. And it has been such a journey in the past 2 years. I mean, they appreciated so quickly, something that we would never seen in the history of the stock market. Such a big company appreciate so quickly. So it's completely normal, even if it continues higher, and I do believe that it will eventually will continue higher. It's completely normal to have big shakeouts, big pullbacks, like to its 20, to its 50-day moving average, that will just, make people think twice about their position in it. Like it has become such an obvious play. Like I personally think that this bull market wouldn't be over until Nvidia becomes the most valuable stock in the world. I don't know how long it's gonna keep its place, but it seems headed that way. Like all it needs to do is basically to reach 1200, and it would be more valuable than Microsoft. And in a short-term perspective, it's completely possible. Right now, going into next week, I think it's in a pullback mode, and I would just wait for it to pull back to its 20 or 50-day and sets up again. Howard?
I think Ivan nails it. I mean, congrats to people that I don't own it directly anymore, just through Qs. But think about it. You had a $250 billion reversal on Friday. That's a big number, maybe the biggest, I think, one-day reversal in a stock. So far away from its 200-day moving average, which is one thing, but with the size of this company being that far away from its 200-day moving average, I mean, I don't know. That's not good investing to chase stocks doing this. At the same time, analysts are still upgrading, right? But they catch up fast. So now we're going to see everybody, at some point, the analysts catch up to what the growth is, and then they start overshooting it. So I think sometimes you just have to say, I missed it, and wait for better entries. But I'm with Ivan. No one saw it. A few people saw it coming. And this is very healthy to have a new leader, right? It was always... Hello?
Howard, are you surprised that the ARK funds, I mean, they sold their entire Nvidia position right before, like in December 2022, right before it took off, and they never bought it back. Like, how can you claim to be an innovation fund and not own Nvidia?
I'm only surprised that people will let a person. No one has outperformed the QQQ at the length that the QQQ's been running. She outperformed it for a few years, or a year. Don't understand why people pray to these gods the way they do when indexing works so well, especially around innovations. One thing to say you're a consumer good expert, which is something that is definable, but something as undefinable as innovation, for people to pray to a person like they deserve what they get. This is not an industry where even Warren Buffett, is just with long Apple. So I think it's an embarrassment. People need to use this ARK innovation to remind themselves what Warren Buffett said against hedge funds, right? The edge is not there. If you're buying stocks and shooting the moon, do the work yourself. Like picking another person to do that work for you is crazy unless there's serious potential alpha, which I use in crypto. But in the public markets, to pay someone else to do your stuff, it seems crazy. Index. So no, take this stuff off your screen. She's bound to get hot again, and she's probably taking way more risk than people realize trying to catch up to missing Nvidia. But people prayed to her because she got Tesla right, and that's what picking stocks does. You get one right and you miss the next one, and you're a goat. Like, I mean, you go from hero to goat. So it makes no sense. Kathy Wood never made sense to me. People doing the work and managing their own money makes sense to me. All right, next.
So speaking of, if you're looking for the AI play, Nvidia stock is probably what you're owning. If you're looking to play crypto and equity markets, it seems like Coinbase stock has become the preferred option for kind of equity, holders who want to bet on Bitcoin price. Is that the story here? Is that mainly responsible for this explosive growth over Coinbase over the last year, where it's up like 350%?
Well, there are not that many publicly traded companies. Go ahead, Howard.
Oh, sorry, Evan. Well, they're very, like I've talked about on the stream, they're very
Howard,
leveraged. They're very leveraged to crypto, right? So when the stock was getting hammered, I was saying in the 50s, 60s, 80s, I don't own it right now, but when I was buying it last year, it was the poor man's way to own crypto, right? Because if crypto bounces, it's leveraged to crypto, which is also why it crashed so hard, right? They benefit in multiple ways as crypto goes up. As it approaches all-time highs again, it doesn't excite me as much because they're so leveraged to crypto. Like, if you believe the run continues, Coinbase is an incredible company. They make a piece off every little bit of crypto. And what I got wrong here when I sold it in the high 100s, in the mid 100s, is I just didn't understand the ETF effects. So I sold, but the ETF effects have obviously helped Coinbase because all the institutions are using Coinbase. So shame on me. The run continues, but I'm not an expert in this space by any means, and I don't love owning after a 300% run. I don't love owning the leveraged. Just historically, I'm not that type of a risk taker. I don't like owning the leveraged play to the industry, and the altcoins are a fun way, like I've been saying, to speculate in the spillover of Bitcoin money into the market. Sorry, Ivan, go ahead.
Yeah, as I was saying, there are just not that many publicly traded companies that you can really get exposure to various cryptocurrencies. Obviously, Coinbase is still charging pretty hefty trading fees, and crypto is hot. People are opening new accounts, going back to their old accounts, excited again, and Robinhood and Coinbase are benefiting of that. Their stock is just going higher. We talked about it a few weeks ago when they were just breaking out. It's just normal. As the market is getting hotter, people trade more. Those companies make more money. The market is already discounting that in their future earnings, and that's why their stocks are rising.
So if you're like a pension fund manager or something of that degree, and you want to get exposure to this asset class in your portfolio, do you think they're choosing coin, or are they going down the Bitcoin ETF route?
Probably a Bitcoin ETF, maybe a combination of both, maybe some direct crypto exposure if they're allowed to. But most of them are probably having either coin, Hood, or Robinhood, or some of the Bitcoin ETFs.
Yeah, agree.
Any thoughts there?
I don't know what they're doing. They're probably still not heavily allocated.
Fair. One of the, moving over to kind of one of the other, really hot trends in markets is what's happening with the biotech industry. And within that industry, the hottest trend by far is this obesity drug craze, led by stocks like Novo Nordisk, Eli Lilly. Is that still the story? Is it just this obesity drug, or what are the other trends that you could speak to as far as paying attention to biotech and wanting to be long this the sector?
Like, there's so many mini niches in biotech that, and none of us really is really an expert that can intelligently talk about that. But obviously, obesity is something that everyone understands, since 1 billion people in the world are overweight, and this is something that you can easily explain. Um, I don't know about the side effects of those pills, but obviously a lot of people are using them and they're happy with the results. And the market has been discounting that for a while. I mean, this is not a new trend. Novo Nordisk has been trending, for years, and the same with Eli Lilly. And then now we have some of the new players like VKTX and then a few other smaller ones that are also busting higher. It's
Wow.
just one of the major trends. But the interesting thing is that now they're not all moving higher together. Like some of them previously, like good news for one company meant all of those weight loss um, stocks would just go up. Now, a really good news for one company, and then we see their competitors' stocks going down. So the market is not just going all in; it's just starting to sift through the winners and the losers.
I mean, this is great.
Howard?
Yeah, this is great news overall for the market. We need fresh leadership. Um, I'm not a doctor. I don't use Ozempic. I can't comment on it. I've heard hit or miss stories with people that use it. So that's anecdotal. Obviously, the price charts say it's helping more people than can be imagined. So great. Uh, I'm not against it. I take drugs, certain things. So, we don't know the side effects, right? 20 years out. But, a year ago, we were worried that it was just Facebook, Apple, Microsoft, Google. And then we can see that there's companies, the semiconductors, crypto, AI, obesity, energy starting to move. There's a lot of working. So money's not, like I said, coming out of the market. It may be coming out of Apple. It may short term come out of Nvidia, but there's other areas which will sop up some of this supply. And what you always need to worry about is the money coming out of Apple and leaving the market for another asset class. I don't see that right now, which is, a good thing.
So zooming out and taking just a bigger picture look at markets, currently, some of my favorite traders on the stream are actually buying puts up here, expecting that we're headed towards a little bit of a short-term topping point. What do you guys see when you take a look at just SPY and QQQ from that perspective?
I mean, short term, we probably see some pullback in some of the strongest sector, like semiconductors. I wouldn't be surprised if SMH pulls back towards his 20-day, rising 20-day EMA. That would be completely normal pullback for people to reload if they want to. But Howard made a really good point that bull markets typically correct through sector rotation, and this is exactly what we've been seeing. Like last week, earlier in the week when tech was a little bit weak, we saw rotation into financials. They were breaking out. Some basic materials, gold breaking out, and then towards the second part of the week when tech bounced, those financials consolidated. So yeah, we're seeing that constant rotations between sectors. So even if the strongest one, semiconductors, pulls back, money will probably go to another place. So you need to be really careful. I mean, people have been trying to catch that 5 to 7% pullback for the past few months, and then in the meantime, so many stocks have gone up 20, 30, 50%. So that's all I have to say.
Yeah, with Ivan, I mean, we have way more long ideas than short ideas. So I do see a lot of questions that come in, and I get upset because they just seem like they're looking at the wrong things. We send out the stock to its momentum 25 list. There's so many ways to look at the markets via strength, and people are still chasing, broken ideas, penny stocks. They're not doing the work, right? And if you don't want to do the work yourself, you've got to find people that have done the work for 20, 30 years and are sharing. And I think that's the point of StockTwits, and that's the point of this type of show is, we're not experts per se, but we've been doing this a very long time, and we've seen good and bad markets. And I don't blame people for trying. JC and I have been talking about the divergences. If you do the counting, the amount of new highs is dropping, right? But we don't have a pickup in new lows. So it's a good market, right? It's a resting market. And there's a lot of stuff that can still go up in a resting market. And so wasting your time trying to call a top in a resting market is silly, right? Like if we had said that Apple's going to be flat for 2 years, but the Nasdaq's going to be up 80%, no one would have made that prediction because everybody thought that Apple drove the market. And now that we have all this evidence that it's not Apple that's driving the market, people are still trying to call the top. That's terrible. That's just not good investing.
All right, I really appreciate that. Okay, let's get into some of the, you mentioned Howard, the questions from the community, and what they're talking about is still a little bit off base from what they really should be. But I thought we got some pretty good questions from our thread that we posted over the weekend, and so I just want to jump quickly into 3 that I pulled that were particularly good and could make for some good insight here. So and Howard, you did a great job of already kind of responding to some of this stuff, but if you can just maybe expand a little bit more. So if you've been someone that has been long Nvidia for this past year, you're obviously made incredible gains in that position. So how do you think about starting to take profit, and should you still be holding, and how do you manage that risk from that point of view?
I mean, it depends where you bought them. I mean, congrats.
Well, that depends.
It depends where you bought them, so congrats. I mean, I'm not smart enough to have rode these all the way up, so I don't want to comment on someone who did. But the general thing is you got to know your own risk profile, and you've got to use trailing stops, and you have to imagine how you would feel if certain targets on the downside were hit, and how would that make you feel, right? You have to manage to your own risk profile. So it's very personal. But again, these companies can exceed to the upside. Eventually, Wall Street catches up and plays the game of earnings catch up, and then these companies can't perform to the numbers that the analysts gave them. Are we there yet? I'm not sure. I think, if you own an index, it's a lot different than owning four separate stocks. So I think it's very personal, but I don't think it's crazy to be taking some profits in stocks like this along the way, even if that means you roll that into some indexes or direct indexing and at least keep your money in the market, but diversify a little bit. Go ahead, Ive.
Yeah. I mean, obviously, it's really hard to generalize what to do. It just depends on your investment style. Are you a swing trader? Are you a position trader? Obviously, if you've been riding Nvidia for so long, and that means that you're an investor, and it just depends what type of exits do you like to take. You can exit on strength when a stock is really extended above its 50 to 100-day moving average, just partial exit, or you can exit on weakness, when it just makes a lower high and lower low, and you can take the rest of your profits there. So it's hard to generalize. And we have to ask the people that have actually done that. I didn't do that. I didn't hold Nvidia the entire time. I swing traded it. So it's kind of.
Is there any simple kind of rule of thumb that you follow? Like, let's say you have a position at 100x. Is it like, okay, I'll take half off and let the less ride with trailing stops, or is it generally speaking you will have a specific strategy for each play in mind with how you can properly manage the trade with your own risk tolerance?
Yeah, I've never had 100x, and I'm a swing trader. Yeah, my holding period is usually 2 to 10 days most of the time. Longer term, as I say, it makes sense when a stock is extended, let's say 100% or 80% above its 200-day moving average. It makes sense to take some off, and then you can trail the rest. Wait for a close below a 20-week moving average, or just wait for the stock to make a lower high and lower low on a daily chart. It's just I mean, there's so many nuances. There's so many ways to manage a position like this. It's never been my approach. As I said, I prefer to compound 5 to 20% gains over time. So it's just my approach.
I like the lower low call out. That makes a lot of sense. All right, moving on to one of my favorite community members, BHS Legal Robbery, and one of the guys who've been sharing market ideas for forever online is Clifford Asness, and from a value investor point of view, these are people that look at the fundamentals of the companies, and they see the balance sheet looks really healthy, they're making consistent profit, but the stock prices are pretty stagnant. And so how should you approach looking, if you wanted to invest from the point of view of, okay, these guys have a great business, how do you evaluate the balance sheet differential versus the actual stock movement itself? And should you mix the two together?
Look, if you're not running a mutual funds like with $20 billion under management, or maybe $100 billion under management, why would you do that? You need to wait for the market to agree with you. I mean, everyone knows also the Peter Lynch approach. Or if you use the product, if you like it, you must own the stock. Okay, Rivian has an amazing car. Look at their stock; it's down 80% since they went public. So you need the market to agree with you. So for me, all those valuation calculations are ridiculous because the companies can use creative accounting and just create the numbers that they want to. So it's really silly to rely on the balance sheets and an income statement, because some of those numbers can easily be changed and altered to the way that serves the company's management. So the most important rule of thumb is for any retail investor or like small hedge fund manager or managed accounts manager, just wait for the market to agree with you and then buy. Or at least always have a stop in mind. Like if you buy something that hasn't been moving, you need to say, oh, well, what if it goes 10% or 20% against me? Where's my exit if the market doesn't agree with me? So you can limit your losses. You cannot be just stubborn and wait forever for something to prove correct if you're trying to outperform the market.
Yeah, if you hear me, it's a good question. I mean, again, I'm a growth investor, so I'm looking for stuff that's in motion with simple stories and simple catalysts, right? So if a stock's not moving, I'm not going to be the one that gets it to move. So I'm looking for stuff that's moving in the direction that I wanted, which is upward to the right. Then my job is to figure out why, and can that catalyst that's driving it upward to the right continue, right? We're seeing with Apple and Tesla, those catalysts have died, right? Tesla has a valuation issue and a competition issue with hybrid, and a attention issue, to name just three. And Apple has a law of large number interview and a lack of momentum. The balance sheet and fundamentals do not matter when that's going on, right? Like the fact is, so many people are watching these stocks and the stock's not moving. That's just not a good sign. I tend to always look for things that are moving and then figure out why, right? And can I extrapolate why they're moving into the future? And that is, for the average investor, that is still going to be the easiest. It's fun to go through financials and figure this stuff out, but I truly assume that everything I read about a company is a lie, especially inside of an Excel spreadsheet. First of all, the odds of them, I'm not saying they are, I'm just saying that's my assumption, that the market is rigged, that the financials are rigged. And therefore, I'm looking for things that are in motion that people might understand in the future. But at least the stock is moving in the direction that I want it to be moving in, and then I can put on a position and manage my risk accordingly.
One of the follow-up questions here I really liked from the community. We'll wrap this up with this final question. Is something you talk a lot about, Howard, in terms of filter failure and how you utilize streams and communities to identify plays. So how do you leverage, okay, a bunch of smart people I follow are all sharing a bullish idea about, this play or this trend. Is that a signal for you to then go, okay, hey, this is interesting, I'm going to start taking some risk here? Or is that just one of the many things that are part of your process as far as evaluating plays in markets?
Are we talking about SoFi, which is just, I haven't met a smart person.
Well, I think
in my network that. Well, let's talk about SoFi because everybody else on the stream seems to like to argue about it. Define smart. Okay, so if you like to see, I mean, the argument in SoFi stream forever is, I feel it's more of a cult, right? And Chamath did the SPAC, but every VC that funded that company could not wait to get out of that company, right? So the people that got it off the ground have gone, right? In the end, it's just a bank. And most importantly, it's underperforming Coinbase. It's underperforming Robinhood even. So you have relative strength, which is terrible. I haven't met a smart person that bangs the tail. And by smart person, I mean the people that got the thing going. So there's no momentum. I don't trust finance. I don't trust, as I said earlier, any number that I see from any company. And it's a bank, right? You dress it up any way you want. It's a lending institution. And so I'm not bullish. So the thing is, I've talked about this with AI. The smart people that I follow, Fred Wilson, Malik, Michael Parekh, people that have gotten these things right many times, Mark Andreessen, Chris Dixon, people that I follow into big trends, Andy Kessler, they're all aligned on AI. This hasn't happened in a very long time. This hasn't happened since YouTube and Web2. So if you're not, you be careful who you call your experts. But for me, they're not famous experts. These are people that have shared their ideas freely over 30 years. And when these experts are aligned, and they are around AI, I pay attention. With respect to financials, we see what's moving: Robinhood and Coinbase and exchanges and crypto. If something's not moving in line with what is moving, then there's other problems that are sure to surface. So be careful who your experts are, and that is exactly.
So would you say this guy's falling victim? This is a classic case of filter failure.
There's a classic case of there's no catalyst here. Explain to me what the catalyst is here. We know what the catalyst for Coinbase is: crypto, high margins. We know what the catalyst for Robinhood is right now, even though I don't think they're a well-functioning business. It's trade volume, right? That is the product of choice for the new generation of investors. SoFi is, I never hear its name in the wild. I only hear its name amongst people that love SoFi. And that's just not a big enough catalyst to get the thing moving. So I think be careful of your echo chamber and who you're getting your ideas from.
The SoFi boys are gonna love that commentary, Howard. Thank you for sharing. All right, before we wrap up this week, let's give the people some new stock picks.
I have no picks this week. I think we had a good run. I think gold is probably my best idea. I don't know how to best play it. And I think energy, XLE looks like it could be the next gold, in that, when it gets above all-time highs, it could have a great run ahead of it. So those are my two kind of boring ideas. It's been a good run for me, so I'm not going to go out on the limb and pick, triple down. Ivan?
Yeah, I think specifically for next week, really short-term horizon, the next 5 days, I wouldn't be surprised if the semiconductors SMH pulls back to its 20-day exponential moving average. So, I wouldn't chase weakness here. Maybe if on Monday we see a slight gap up, a green open, I might try some puts on that. But if we gap down, I'm not going to take that trade.
All right, love it. Little bit of put energy, throwing a curveball here at the end. All right, guys, thank you so much for your time this week. Really appreciate it. I mean, you guys were all over this last week and gave the community lots of alpha, so they appreciate the heck out of you guys. And that's it. That's it for us this week. Any final thoughts?
No. Be
Not
smart.
for me.
Be smart.
Cheers, guys.
See you guys.
Get some sleep.
See ya.
See ya.